Anyway, I want to welcome everybody to the Total Partners Summer Luncheon. We've got an interesting program today. We're going to go over a couple of our existing programs that we have closed recently. We're going to talk about a new drill that we've got coming up in the near future, offset to the Henderson. We're going to have an update today on our Total Production Partners, the Astrogleam deal, as most people refer to. And we're also going to have a complete update on Total Adams Creek. That's the Adams Creek Town Center Real Estate Development. Matt Martis is here to give us the details on that. I've got a few introductions to make. We've got the Van Horns, Craig and Caleb, the CEO and COO of the RED, our operator and sponsor of the Astrogleam deal. We have Matt Martis here, who is going to, as I mentioned already, going to give us the update on Adams Creek. I want to take a moment to introduce everybody to our new intern, Jimmy Hunt. Jimmy, raise your hand. Jimmy is a sophomore at Oklahoma State University. He's on an academic scholarship. He is a 4.0 student, top of his class, so we're proud to have him on board. He's a finance and accounting major, and glad to have you on our team. We also have our accounting team here today. Not going to refer to it as the geological team. That's a joke. That's a joke. That was a mistake I made, when was it? 3 meetings ago. But it's Clayton Woodrum, and actually the person that does all our work, Shauna Robinson, is here today. So we're glad she's the one that does all our tax returns and cadence for everybody that's in our venture. Mike, come on in. Just getting started. Okay. Last but not least, we have our accounting manager. Now you can bring it to the boss level. Teresa Molina, the one that writes all your checks and makes all your ACH deposits. All right. Let's go ahead, Jimmy. Give me a hand and let's hand it out to Teresa. It's our first handout of the day. Okay, I'll call your attention to the schedule on the back. On the front page is the Adams Town Center, Adams Creek Town Center update, which we'll cover that when Matt comes up here in a moment. Investment ventures for 2024 is what we're looking at. Many of you that are here today are in our, now we're calling it the Astrogleam deal, Total Production Partners. We did close this venture in June, $3,345,000 capital structure, and since then we've made good progress. We've been on location. We had another field trip in June and met with the Van Horns on location. And we're going to have an update, as I mentioned, from them here in a few moments. Another thing that is new for 24, new program or a new venture, is our Total Seismic Partners 2. Those of you that are in Total Seismic Partners know that we made a pretty good well, one that wasn't expected. We came up whole after our primary target, the Viola, did not appear productive, and we made a well in a pin sand, an upper pin channel sand. The Wewoka Crew that has proven to be a pretty good producer. And in fact, on our total capital structure, we've returned 21% to this point in time, which includes return of capital. But at the current rate, we should have returned about 40% on our entire investment in the next, by October. And our pooling orders run out for our next location, and Dave wants to go ahead and drill an offset, and we'll drill it all the way through the Viola, the Simpson Dolomite. Dave is going to do a different completion technique. He thinks that we may have had some reservoir contamination from the conventional drilling. And we're going to do an open hole completion this time, where we go down and just inch our way into the top of the Simpson Dolomite, so that we don't contaminate the reservoir. And that way, he believes we may still have a major discovery in the Simpson Dolomite and the Viola, but we're going to approach it differently this time. And then, of course, we still have the productivity of what we believe has been proven in the Wewoka Crew. And that's going to happen in October. The people that are in Total Seismic Partners 1 will have first right of participation. It appears that drill and complete is going to require about 43 to 44% of whatever your original capital commitment was to total seismic to drill and complete this well. And as I mentioned a moment ago, by October, we should have returned about 40% cash return on our total investment in Total Seismic Partners 1. So, any questions on what we're doing on that offset well? Okay. Okay, anyway, we're excited about that. That'll be a quick drill, and it's something that is ready to go, and we hope we make a great well there. Okay, I'm gonna turn this over now to Matt Martis, and he is going to discuss our Total Adams Creek venture. Okay.
I feel like my old coaching days, Scott.
Yeah.
Thanks for having me today. I'm Matt Martis with Payne and Associates and Lee Capital. We're here to essentially do an update on our project, Adams Creek Town Center, which is right at 3.5 years in the making. So we started on this particular site 3 years ago, and placed property under contract and started to assemble, identify and assemble kind of the best tenant lineup for the demographics and sub-market that we targeted. The lease-up demand and ground-up retail real estate development from our standpoint has been extraordinary. We currently have more tenants, tenant demand than we are going to be able to deliver space, which is a great thing in our business. And so I'll talk a little bit about kind of where we are today. Current tenant. So the primary tenant lineup is approximately 200,000 square feet. There's a little write-up on each tenant. Most of these, a handful of them are publicly traded. So Kohl's, Burlington, Five Below, Shoe Station, Painted Tree, which is a really unique tenant. We're excited to have them. Pet Supplies Plus, Beals, which is a family-run retail company that has over, I think, 1,000 stores now. And then what the update consists of, if you look at the handout, which I don't know that we have it on the board, but you will see when we last presented this opportunity, we hadn't determined who these tenants were going to be. So subsequent to that, we have an approved deal with a tenant called Kids Empire. Family entertainment is one of the things that in the Broken Arrow submarket that is lacking. So we went out to target certain family entertainment users. And Kids Empire is going to be a wonderful tenant. It's kind of the new version of Chuck E. Cheese, if you would, if you guys have ever been to that. Much better, sleeker, different business model, but they operate 37 locations throughout the country. That was a really good win for us to add the entertainment component to an already stellar soft goods, credit tenant lineup. And
larger floor plate.
Yeah, and that's right. That's a good point, Scott. And what that allowed us to do, and the other tenant, and this says preliminary, which it is. We had a real estate tour last week. They approved the site, so now we're finishing negotiations. But what adding these two tenants allowed us to do is maximize this last quarter of what we call the Power Box lineup. And we were able to go deeper with the boxes without giving up any frontage of our retail space. And so in our world, this land costs a lot less or has a less value than this land. And so when you can increase depth without having to eat up your storefront, it really drives your net operating income higher with minimal cost. And so I think the original appraisal for this project was just under $68 million. We've added net operating income at minimal cost and preserved, kind of the more expensive property in the front and the higher rent end cap and shop space. Smaller tenants generally pay higher rent per square foot. So that was a very positive development in the project to be able to bring those two tenants, and also 85% of retail purchases are driven by the female in the family. If you're like me, you know that well. And so when you look at the soft good nature of this lineup, you can see, soft goods, shoe, Painted Tree will have 100 different vendors, all independently owned and operated by, it's kind of the new version of what you might consider an antique mall, but they're very good retailers, 60 locations across the country. Pets, and then more of a home, home furnishing. So when you try what we call curate the rent roll or the tenant lineup, you want tenants that have synergies that work well together. So adding Kids Empire, which is an entertainment component, and then the last tenant that we're working on to finish the box is Goldfish Swim School, and they're a very unique tenant. They operate, I think, in 34 states right now. So it's a swim school with swim lessons, and we have to build a pool, which we're working through the details of that. But that kind of really rounds out and this tenant lineup and has synergies where there'll be cross shopping, which will help the restaurants. And I'm going to mention this. Well, this is kind of weird to publish this one. So we do have a tenant.
We can't tell them who it is.
Can't tell them who it is.
Okay.
We do have a tenant, a national tenant, very well known, that has approved this corner.
For their largest footprint.
For their largest footprint they have 4,000, maybe at least 3,000 locations throughout. You guys would all know who they are, so I apologize, but we can't disclose it yet. So we do have this out parcel kind of spoken for, and we are 50% leased on the shops with multiple restaurant groups looking at this end cap, which this will be a very prominent restaurant location. It has a patio. It's going to have great signage, great ingress, egress. So in terms of the lease up, we're very excited. We'll be 96% pre-leased before we buy the land. That doesn't happen very often in our business. If you guys are familiar with the Simon Outlet Mall, which we were a part of, that's getting ready to open next month, they were at 86%, and they were ecstatic about where they were in terms of pre-leasing. So it's going to be a great project. We're 90% done with the equity raise. One key development that we've struggled with, and Scott was aware of this, is we had to get an amendment to a restrictive covenant that was laid down on the entire site from Lowe's. We started on that 16 months ago, and we finally have the signed document in hand as of last week, which allowed for us to move forward with the project. But it was a very tedious process to get through their approvals, but we have it. So big picture, we should have our final loan commitment approved through committee from First Star Bank this month. We have our economic $16 million incentive already signed and approved from the City of Broken Arrow. We'll be 96% pre-leased with at least one, probably two out parcels spoken for. And we're in a really good position.
But
So-
bottom line, you now have a larger projected NOI from additional space and from higher rents. You were telling me some of these you're getting rents that were significantly higher than the base projections.
That's a great point. So we had Pop Shelf was a tenant that we had initially negotiated with. I think their rent was $19 a square foot. So the blended average of the two tenants that we've added will be right at $23.50.
Wow.
So we've improved there, and we think we'll have an opportunity. We were fairly conservative in our projections, which we try to be in our book that we put out. So if you've looked at the total investment package, let me get to that the actual deal point. So the way this financial structure of this project is set up for what we're calling the Class A limited partner portion is 85% of the cash flow will be returned to the Class A member prior to any distribution made to the GP. So it's a pretty attractive structure, up to a minimum of an 8% preferential return. That starts after we get it built and we get into the operating period. So it'll take approximately 12 months to build the back portion of the center, and our joint venture partner, Parks Development Group, which I can speak to out of Nashville, they will be responsible. They own a construction company. They've built in 48 states. They are very capable. They're building a 500,000 square foot shopping center in Alabama.
This is not even a big deal for them.
This is a mid-sized deal.
Yeah.
This is a mid-sized deal. And so we will accrue a 4% preferential return during construction, which will be paid once the project is stabilized and the tenants start paying rent. And then the cash flow split will be 85% to the Class A LP. And we're estimating a target internal rate of return of just under 16% and a 2.21 equity multiple upon exit.
And this is based on the base projections originally. This does not include the higher rents, the bigger floor plates, and you were telling me on that one out parcel that the rate of return you were getting on that was way higher than what's in the base numbers. I mean,
That's right.
You told me some number like I don't.
That's a good point, Scott.
Yeah.
So if the way we set up the projections, again, conservatively, for example, in our original model, we used 2,300 square feet for this out parcel. We've since grown it to 4,200 square feet. Our original rent projection was $40 a foot. We've got an approved deal with this tenant at $44. And so we haven't gone back and updated the model. We feel like the deal was good enough the way we underwrote it. But we're pretty confident we should be able to improve on the economics. And certainly, if depending on what you believe the Fed is going to do, our construction loan, the portion that is First Star, which is roughly half, that interest rate floats. And so we should be borrowing the majority or drawing the majority of the funds to build the power portion of this. Q1, Q2, Q3 next year, when we actually start, going vertical with tilt-up concrete, etc. We don't have a crystal ball, so who knows what the Fed's going to do. But in the event that they did start to cut, our construction loan floats, but our rents are constant. We've already negotiated them, and so we feel like there's a reasonable expectation for upside based on the interest rate environment. We're not using those in any projections that we provided to any investors. We're using the cap of our construction loan, which is 8%. For all of our financial underwriting. So,
bottom line, once this is up and running, with more square footage, higher than projected rents, potentially lower than projected interest costs, the actual value on resale, the appraised value of what could be significantly higher than what the base projections were.
We should be able to significantly improve upon
which that bottom line goes to the equity investors, which increases their return.
Absolutely.
And that's not in the projections. So
no, it's exciting.
Yeah.
Kind of another, I'm going to grab this, pull a few stats, which I think are, especially if you live here and you're in this community, are pretty cool. So new retail sales, this project projected to generate is $57 million.
Annually.
Annually.
Right.
ad valorem increased projection is right at $500,000, which will increase significantly upon developing these out parcels. New retail jobs, so permanent jobs for this project, 622 jobs, which is pretty exciting. Your construction jobs are right at 650 to construct the project. So it's going to be a really a good economic engine for Broken Arrow in Northeast Oklahoma. And a lot of these retail sales, so we do a projection on kind of how we identify the market. And here are just some stats. So the primary trade area is approximately 160,000 people. So that would be what we identified, say, in a 10 to 12 minute drive time. In the 15-minute drive time, there's 346,000 people. And so there's already 5.2 million visits a year occurring within the Adams Creek development. So Broken Arrow is executing as a community on a very high level. They're experiencing a lot of growth. And the city has been very great to work with, providing us. We couldn't do the project without the $16 million retail sales incentive. And so we'd love to have your participation. We're excited about it. It's a long time coming, but we're kind of at the finish line. And,
another interesting stat talking about the strength of this location, and I think you talked about this in the original meeting, but for people that weren't here, you guys have traffic patterns and retail sales and visits. I mean, I'm not familiar with all the stats, but the Lowe's store that we're sitting next to is the number one Lowe's store in the market area. I mean, bigger than Tulsa Hills, bigger than any other location they have.
Yep, in terms of visits. They wouldn't disclose their actual sales, but in terms of customer visits, it is. And that was really what jumped off the page to us, because they're a very good barometer. And all of the tenants, one thing that's going on in our business right now, and this, you may not understand this if you're not in our world because of the media and how they report. Retail space is 94% occupied across the country. And then when you talk about Class A retail space, it's even higher. Parks Development Group has a significant portfolio. Let me see if I can get to some of their. They own the Walk at Tulsa Hills, which you guys may be familiar with, at 81st and Highway 75. They still own that. We developed that, and they were the lead on that 10 years ago. The Oak Shopping Center in Murfreesboro, it's a 300,000 square foot shopping center. Similar tenants. This one is a very cool project. I've been to this project. It's 750,000 square feet, Nashville West. They have zero vacancy in their entire portfolio.
I remember when I asked these guys on the original due diligence call.
Right.
I'm going, well, what's your overall vacancy rate in your properties that you manage? It's simple that we don't have any vacancy.
Right.
I mean,
Speaking of management, I did want to introduce our COO, Greg Mahaney's here. He's with our team. He runs our property management company, and we manage over 2 million square feet in the Tulsa MSA, and we have a few other satellite assets, but we couldn't do it without him. He's a workhorse. We more than likely will end up managing Adams Creek Town Center, and so I wanted to recognize him. He does a great job, and we have a staff of how many, Greg, now?
We've got 11.
Yeah, 11 employees on that one, just the property management side, which is important, right? One of the things and reasons that we've brought parks in as the general. This is another project they did, mixed use, and you guys may have an opportunity to meet. Scott has met Gary and Joe, and so he's met the team. Have a good feel for them.
You bet, absolutely.
So they're a really good group. They operate on a level that really, there's not a lot of companies in Oklahoma that operate in what we do in terms of shopping center development. There are very specific and significant timelines and guidelines when you build for these national tenants. significant penalties in terms of not delivering the project on time. And so they have a development company, they have a site work company, but they also have a vertical construction company. And so they are used to building these projects for themselves and their own account and for others. They get hired by a lot of other third-party developers to be their general contractor. So we're getting a team that is one of the best in the country to actually get the project built on time and on budget. And I wish I could talk about some of the other restaurant tenants, because that seems to be what a lot of folks want to hear about, but we will be able to in time once we ink those deals. So any questions about the project or timeline or
This is David.
Do you have any anticipation of selling any of the out parcels, or is it going to be a straight lease?
they are marketed for lease or build to suit. So how we've modeled it is primarily not to sell. That's a great question. Would we sell for a special tenant? Yes. And I'll give you an example. Let's say a really high volume, let's say Lululemon showed up. I'll just give you an example. And they said, no, we only own, and we want, that's a great question. If we want this piece of property, and we only own our own real, which that's not the case for them, but we know what their sales volumes are, right? They're one of the highest grossing retailers in the country, so we may sell at a very high number, knowing that we're going to get 3 pennies of every dollar of sales that they do. So special situations, we may do that, right? But right now, if you were to call and say, hey, we want to buy this out parcel, we'd say we'd be happy to lease it to you. So, great question.
One of the things that I've always thought of when you're looking at investment real estate, trying to put it in a model, and I think I mentioned this in our last meeting, you can look at it like a tax-advantaged CD. You have your money there. You know you're going to get more money because you're building equity. You're building an income stream that's going to have more value. It's going to appreciate in the future. In the meantime, you're getting a double-digit cash return on your money. And at the time you sell it, which is a 5 to 7 year period, you're looking at long-term capital gains, and you're getting a substantial multiple on your money.
That's right.
As opposed to another type of model. So that's the way I would look at this from an investor standpoint. And I think it's the most attractive real estate development I've ever had the opportunity to participate in and to be a small sponsor of.
Well, that's saying something, Scott. So.
I've been around a long time. So. All right, other questions? This is a super interesting deal. And congratulations to you and the team. For, there was some question about Lowe's. There's a ton of hurdles that you have to jump to get to this point, and we're at the finish line now. Contributions for equity for participation is going to be due July 31st this month. So those of you that aren't in the deal yet, we do have a little room, not a lot, but we had some. We were fortunate to take down a position, and we have some room available. So give us a call.
Thank you.
All righty. Thank you. All right. Okay, I'm going to introduce we're going to have an update now on our total production partners. Many of you are in that deal now. Craig Van Horn and Caleb Van Horn are here, and they're going to give us, and let's go ahead and hand out the update sheets here. We can do that. A little play on words here. Some of you may appreciate it. The update, make Ames great again. Ames, of course. Of course, that's what we want as investors. We want to make Ames super great again. All its original glory. Let me see if I can get your PowerPoint up here.
Thanks, Scott. First of all, for those of you that are a part of this, I want to personally thank you for trusting us and partnering with us. We're really excited about this. We have been for a long time. The last time we were here, we had to be a little bit coy with how we spoke about it because it was still trying to get over the finish line, we could be a little bit more forward now. So thank you guys for partnering with us. Hopefully you'll be as excited about the updates that we are, but we think that we've really got a home run here. So just a brief reminder, TEP was a part of 33 operated assets that are operated by us. There's a number of additional wells, 34 that are non-op, operated by other operators outside of us. This is a 28-day average. It's about the cleanest data that we could get since we took it over. And
This is only on operated assets too. We
Correct.
don't have non-op assets related to this yet. We don't have all the data in.
So from the assets that we operate, so of the 33 that you guys are partners in, we're averaging 116 barrels gross per day, and the sales have been 107 per day, which is pretty. That's how you make your money. So we're right on target as far as what we were expecting with the production figures, and we're a little bit ahead of the game on the sales side, which is really what matters.
Talking about the production, the original presentation was 128.81 barrels.
Yeah.
But that included all of the non-op
Yeah.
and the overrides.
Correct.
So to compare apples to apples, and I know you don't have the data yet, because we only closed on this a month ago.
Right.
But literally less than a month
Yeah,
ago.
yeah, Less than a month.
It was 11th of June.
And then there was a little bit of implementation with the new employees of getting them into our system, so there was a little bit of a lag there. And we'll go over a couple of other reasons of why, but if you were to ask me straight up, and I've got a mic on and I'm in front of a camera with a bunch of people, so we're having a private conversation now, I think we're ahead of schedule on production. But with the data we have, I can't really say that with full confidence. So we're definitely ahead on sales. And that's where we get paid. So I know that for sure. That number is real. So this is a reminder of exactly, we're going to focus really on the assets inside of the AstroBleem, because that's where the majority of the production comes from and where we've spent the majority of our time thus far. That's a rough estimate of where it is. Brief reminder about it. Asteroid hit the Earth, broke up the Arbuckle during the Jurassic period. It's a geological anomaly that allows for vast production in the Arbuckle, which is typically, a difficult zone to produce from. These wells, when they were drilled, came in from 400 to 800 barrels a day, and some of them, which we now own, are still making 30 plus barrels a day and have since 1990 when they were drilled. So they're really, it's a prolific field. Harold Hamm wrote about it in his book. We can now talk about that. It's in the beginning chapters of Game Changer. This is what made Harold Hamm rich. The Bakken made him wealthy, but we're trying to get rich from this one. So Make Ames Great Again is a real thing. It's a great historic field. You can read a lot about this, or ask Shane. Is it Shane? Is that right? Yeah, or ask Shane. He knows all about it. Okay, so here's what we've done to date. This is really just focused, all of these assets that are listed here, the Donna, Emma, Bob, Sam, Fred, and Herman are all lined in to the central gathering system, which is the disposal. A few of you have made a couple of visits out there. We've gone and seen the Chet disposal. So these are all lined in assets. They're all inside of the AstroBleem. They're all within 3 miles of each other as the crow flies. So this is historical production in 23. You want to point?
Sure.
Thank you. So that's historically when Continental had these assets, that was their average in 23. That's the profit that they averaged in 23 as well, which I think is important because an example of, we've had 2 workovers so far on 2 of these wells, the Sam and the Fred. We actually did work over the Herman. We're not completed with that yet, but these 2, I think the last time that they pulled the Sam, it was $60,000 for a pump change. That probably is not very relevant to a lot of people in here, but $60,000 for a pump change is absolutely ridiculous. So we've already been able to save an enormous amount of money in just the limited things that we've done. That'll continue, but they still turn pretty good profits on these wells, even with astronomical cost. And that's just in the field. That's outside of all of the overhead that comes with being Continental. So what we've been able to do to date. So the Donna, it's the biggest producer. It had a surface level pump that transfers the water go down the day after we closed, which we had to shut it in for 4 days, get a new pump out there, get it lined in. So the average is actually closer to 40 barrels a day, but we're still averaging more than they did in 23. So that is a true 28-day average. If you looked at it more within the scope of a few weeks, it's a lot higher than that.
You're saying the current production now is almost double that.
It's close, yeah, for sure.
About 35 to 40 barrels a
Yeah.
day.
That's the one when we were out there on the last field trip. I think Robertson and Berglund said that's a lever.
Yeah, it's a lever.
That's the lever.
Yeah,
Tell them what a lever
Don't
is.
pull that lever, is what they said.
Yeah.
Leave her alone.
Yeah.
I told him, don't tell my wife that. So the Emma, this is another big producer. It historically is when these wells go down. Here's another reason why this is a big home run for us. Continental has within 20 miles of these wells they don't anymore. They just sold it, but they had a whole field of wells that made 200 barrels a day per well, roughly. So when one of these went down, they would sit for a month and a half without getting a rig out there to go fix it. It's part of maintenance of oil and gas. They would let these sit. We don't let them sit. So we're going to be a lot closer to the 28 than we are the 17. This is just operational mishaps that they would let something sit and wait for their rig to get freed up rather than calling and getting it done the next day. So we operate a little bit differently. So 28 is what we've had the last, or 28 over 28 days. The Bob, this one is the one that we relieved the casing pressure. It had 600 pounds of casing pressure. We relieved it, and it free-flowed 194 barrels overnight of oil, and has since been making about that 17 barrels per day, maybe 15. But operationally, we didn't really see a reason to do that. The Sam, it parted a rod a few days before we closed. We asked Continental not to fix it because their costs were much higher than ours. So we got to work on that right away. It has a new string design in it. That's actually close to their 3-year average as well as their 2023 average. And over the last 7 days since we've gotten it operational, we're averaging close to 12. And that includes days of it trying to make back water. So the first few days, these wells will make water, no oil, and then you start to see the pay. And so we anticipate that it's going to average 13 to 15 barrels a day. The Fred, historically, over the last 3 years, is really close to this number as well. And we put a brand new string in it. We dropped it down 900 feet. They had the pump set about 1,000 feet above the top set of perfs, and dropped that down. And it's making 13 barrels a day on average. It had a similar thing where we had a few weeks of only water before we got to pay. The Herman is really interesting. We've pulled all the tubing and the rods on it. We're waiting because the SAM rods were in really bad shape when we pulled them, so we sent them to get inspected. So we should get some credit back on some rods. So rather than just going and spending a bunch of money on a new rod string, we're going to see how much credit we have prior and shift that over. So that should be coming in the next week. But everything's out of the hole. But in between there, we opened up a couple of valves. They have not run this well in 6 years. We opened up a couple valves, and it free flowed 30 barrels of oil over 2 days. So pretty promising there. These are healthy reservoirs. They run them very strange. I think that there's been a lot of shortcuts taken, a lot of Band-Aids put on when you should have just fixed it, and we aim to do that. So that's the quick production update. As far as I know you guys were interested in this in our last meeting, but we have all the lined-in assets, so everything that's going to the Chet disposal is now equipped with pump-off controllers, the AI system that we use. I'm going to show you that here in a second, but all of that is done. We're going to start moving outside of the lined-in assets now based on their ROI, the historical ROI. This is the gathering system. So
this is the Chet disposal.
Right there.
Here. And then you've got I think this
that's
is...
the Emma. That's the
Emma.
SAM.
Yeah.
Yeah.
Well, Donna and Fred are both down here in section 31.
So all of the assets that are in a white box are now equipped. We can see tank levels. We can see the pumping unit. We can see if there's an issue with the transfer pumps, and if there's an issue with the disposal, it will systematically shut down wells in order based on how much water they make so that we don't have a spill. So here's our next steps. The Herman is the one that we have everything out of the hole. It's free flowed 30 barrels of oil over 2 days. We'd like to bring that back online for a number of reasons, but we're waiting on the rods to come back. We met with the Corporation Commission yesterday about converting. The Chet was originally an Arbuckle producer. They put a cast iron bridge plug in it and expose the second Wilcox to dispose into. We've talked with the commission yesterday about maybe reverting that back to an Arbuckle disposal. We've also had some ideas about taking an additional well that's in the area that's a pretty low producer and convert that to a Wilcox disposal as well. The reason being, as we turn on, there's a number of wells, and the ones that went on the field trip know there's a number of wells in the area that are not being run right now, and we don't really know exactly what our water cut is going to be on those. So having a little bit of extra space for disposal will probably give us, at least it'll make us feel warm and fuzzy, but also if anything happens to the Chet, it gives us that extra security of being able to dispose the water, maintain operations. So we met with him yesterday. It was a positive meeting. We're going to continue going down both of those routes. We're going to start installing amplified, the pump-off controllers outside of the Bleem, and then we're continuing to optimize the assets. It's been a little bit of a struggle trying to get everything installed just because the systems that Continental had in their wells prior were very complicated. So we got that all figured out now, and so we really haven't had time to optimize at this point. But as we continue doing this, we'll be able to start finding the fine-tuned points of how the pumping unit should run and get them in order to where we can maximize production. So that's the end of what I have to do. Under 10 minutes. I tried to do it, but do you guys have any questions?
Yeah, we got plenty of time here. So, any questions, guys, on what we're doing here? This is. I think it's important to explain to them the water disposal capability, because that's really that will help you increase production
On existing wells, because you can move more fluid.
Yeah.
And that's been an issue, but I didn't realize it was an issue till I was out there because of the pressure.
Well,
But-
we've learned a lot as well as we've gone through this. You know, you don't. For those of you that have done operational, any kind of operations in oil and gas, you typically don't set a vertical pump, downhole pump above your perfs. It's kind of a no-no. Several of these are thousands of feet above their perfs. So they're leaving a lot of fluid in the hole that can be...
Which makes it inefficient.
There's a lot of reasons why you wouldn't do it. We could go down that laundry list, but we've already seen benefits of moving the Fred down. That one was about 1,000 feet above, and we moved it down.
Go back to the slide that shows the increase. That's impressive. That's incredibly impressive. And that's a well. The Herman well was one that weren't even, we didn't even pay anything for.
Yeah.
They weren't part of the PDP package.
I'm not sure. This one averaged 3 barrels a day over the last 3 years, so that one had some value, but not 13 barrels a day. And the Herman, it was a zero as far as what we paid. And it definitely has life. There's no doubt. If it free flows 30 barrels of oil just by opening a valve, there's stuff going on down the hole. So the SAM currently where it sits, I've talked with David Robertson's in this deal as well, and I've spoken at length with him about different ideas that we've had and what we're finding, and he's digging into the files with us. But we kind of worked together on the plan for these two wells because they were both down at the same time, and we found out that this was about 3,000 feet above the perfs is where they have the pump set. This one was about 1,000, so we decided to test the Fred and take it down to where we thought the pump should be set, and run the sand back relatively the same way that they had it prior, just so you didn't blow your load on the whole thing, just trying to solve the problem that wasn't there.
Yep.
So we've seen good results from this. Next time that we have a rig on this, we'll probably deepen it as well. And
you guys have barely scratched the surface in terms of what you're wanting to do. And it's been less than a month.
I would say we've scratched the surface on what we were allowed to see during due diligence. They didn't give us their wellbore schematics. We couldn't understand. They wouldn't let us touch any of the pumping units. We couldn't open the boxes. We really didn't know. We knew what we were getting on paper, but we didn't know what we were getting in practicality. And so as we've dug into these wellbore diagrams and realized this is a 9,400 foot well and they have the pump set at like 3,000 feet. You're trying to figure out why. And there's some good things about that too. It's not necessarily bad. It's not the way that I would like to operate these wells long term, but it means that you have a high fluid level. It means that the reservoir is really healthy, that you have pressure that's feeding the reservoir, which you can't buy those things. So those are good problems to have. Now, as we produce more fluid, that's where the disposal comes in, of having extra space in your disposal. Because we could add more right now to what we currently have. It would not be a problem. The problem is going to be if we continue to add all these wells that we didn't pay anything for but have potential to make real money. It makes sense to have additional space to then dispose of that water. So
explain to them the reason why, because Arbuckle, a lot of people in here know that Arbuckle disposal wells were associated with earthquakes, and the Corporation Commission has done a lot to restrict water disposal into the Arbuckle, which is the basement. But in our case, we're producing from the Arbuckle.
Yep.
And the fact that we're putting water back in would be, instead of disposal, injection.
Yeah.
Which again, longer term, injection is like a water flood, secondary recovery. You increase the pressure in the reservoir. Since we're relieving pressure, this is the reason why that the Corporation Commission could rule in our favor on it.
It's the only reason they would consider it. Arbuckle disposals are pretty much banned, and if you do have one and there is an earthquake in your area, then you're the first culprit. And that was made very clear to us. So we're looking at all options right now. Whether or not we go back into the Arbuckle or we find another well that could be converted to a disposal in the area that makes sense. We're going to find the best path forward, but either way, I think that it would behoove us to have some additional disposal space that's outside of the shed. It's just
we're also lined into a commercial disposal that we have an agreed upon rate to be able to send water. So if we have the check goes down for a certain user, we can switch some valves and send all of the water. But that costs us more money than our own disposals. So long term, it's better to have some redundancy of the water capabilities.
I want to go down and show a couple of these pictures. I hadn't shown these before. These are pictures we took when we were there on just a couple weeks ago on our last. I can find it. It's not the right one. I had this up a moment ago, and there were some things out there that I thought were extremely interesting. I want to start from our last show, from our last trip out. Okay, this is from the closing on. There we go. That looks familiar. Okay, tell them what that is.
This is the first shipment of the
Well kits.
of the well kits and tank monitors for these wells. So those have all been implemented to as of right now. We just got a new shipment yesterday to start doing the ones that are outside of the AstroBleem. But inside of there is the pump-off control kits to optimize the wells, everything you need to go and hook those things up, and we'll show them exactly what that looks like in real time.
Those were our closing documents on the day of closing, I think.
Yep.
Somebody sent me that picture.
That was my dad.
Yeah.
Those
Yeah.
are the assignments to be filed.
Yeah.
Yeah. That was, thought that was interesting. Now, this picture is of you in the, we probably need to get that, if I can get it to the full screen here. There you go. Try to pump that up a little bit. There you go. Let's do that. Nope. Small.
That plus, yeah.
That's a
Explain to them what that is.
dynamometer from, I would say, the 70s. But it was pretty cool. It's one of the things that we ended up getting with the field office. Was,
I mean, that's an antique.
Yeah, yeah.
This is what they used to use
Yeah.
manually to go out and do the stuff that we now get all automated.
Correct.
Correct?
Yep.
Yeah.
So it provides you a surface and a pump card that we get now on every stroke remotely to our phones. So pretty cool.
This was in the warehouse portion of your offices, and that's something that I don't think most of these people know, that you guys have acquired a field operations office that's within just a few miles of our assets.
Correct.
And that we ended up with a lot of excess equipment, and this was an old Continental office space.
Yeah,
right?
originally, yeah. We looked at a number of different areas, number of different offices. This one made the most sense based on location to go ahead and acquire. So we got a field office that's in Ringwood. You guys are welcome to come by. We're not always there, but we'll tell you where the key is if you need to go to the bathroom.
Well, and this will give you a place too, because you've got a number of empty offices in there.
Yeah.
It's got heat and air.
Yep.
So you can set up bunks in there.
Yeah, that's
where you can
the,
be in the field.
Don't tell
having
my wife again, but yeah, that's probably going to happen. We're
Got
probably
air
going to have to spend some
mattresses
time
ordered,
up there.
so.
Yeah.
more equipment that you just picked up in the acquisition of the building.
Yep.
That's another wall of equipment there. That was our field trip group. Notice we've got Jimmy, our intern, on the right. There's Kat. There's Richard. There's Dave Robertson. There's Caleb, Craig, and who's that back there with the ball
Is that
cap
Mike?
on? That's Berglund.
Yep, Berglund, yep.
Yeah. Okay. And this was an interesting story. This is your field yard, and you've got a couple of acres out there.
Yep.
And you were telling me the story. Tell them the story about Harold.
Oh yeah. We were told that when Harold was about 14, he actually made this yard on a bulldozer. So he was the one out there clearing the pad for this yard. He built the berms and
14 years old.
yeah, when he was 14.
Yeah.
And ended up purchasing it at some point, and Hammond Phillips is actually directly to the north of this building, which
Behind it.
Yeah, which is obviously he was part of that. I don't think he is anymore, but yeah.
I mean,
so they've been in this area for a long time.
The legacy of Harold from a teenager is part of the operations out there
Yeah.
now.
Yeah.
And man, we've got a storm shelter,
Yeah,
right?
yeah, just in case. There's,
Maybe a wine. Could you use that as a wine cellar?
yeah, possibly. There's a lot of crickets in there. I don't know how those pair together, but
Okay. All right. These are more. Now we're out in the field, and that was the first well we went to that day.
Woods.
it's the wood. Yep.
Yeah, Wood 1-24.
And you had the equipment on it, the amplifier.
Uh-huh.
I like that picture because of the wind right next to it, and the
It's windy out there. It's always.
And that's, guys, we're looking at the, there you go. There's a piece of equipment installed. And here's the thing I was impressed. You were out there. A lot of this you've been able to do yourself.
Yeah, I would say the majority of it. Now, these panel boxes were a little bit more complicated than I'm used to, and I'm not an electrician, but they've all since been figured out. But yeah, we've done most of it ourselves.
There's Jimmy. Told him to take notes. Jimmy's already filled up 2 legal pads of notes, and he's been an intern for a month. So we're. And there's David talking about, David Robertson on the right there, talking about well operation there and the amplified equipment and so forth. Dave's real impressed with that. And there's another, that's on the interior box there,
Yep.
another one of the amplified units. Who's that in the cowboy hat? That's the look you need right there. I love it.
That's reserved for the field.
Yeah, well, you need it out there.
Yeah.
You get that. I tell you, it was blistering hot that day.
It was.
It was 100 degrees, man.
Yeah.
And without the cloud cover, we were baking, literally.
Scott,
Yeah.
I was wondering, could we have them talk a little bit about the financials?
Sure, ask them anything you want, Cap.
Pardon me?
Ask them anything you want.
I was just going to say where we stand on the financials, expenses, and things like that.
Yeah, I mean, we're 28 days in and everything lags, but we are very mindful of it. I think we kind of talked about this a little bit while we were on the field trip, but just from seeing how Continentals run these historically, we should be able to decrease their expenses on a workover, things like that, by 25 to 30% pretty easily, and that's where the majority of their money has been spent, and especially in the last couple of years. So we know we're going to reduce overhead costs just by being a smaller operation, but the biggest savings are going to be on workover expenses, where they had lots of layers and requirements for the rigs, and
A good example is on when they do a simple workover. They require that they bring porta potties. They require that they have a
cooling station.
I don't know what the proper term is for it, but I call it an additional deck on the pad so they can stand up above the wellhead. They require a foreman to be on location,
Backup
generators, and this is just for like a pump change. So that's an additional, at minimum, $15,000. At maximum, multiple days. Yeah, you're looking at a lot.
The upfront money that we put in, as far as how that's covering expenses, how are we doing that?
Yeah, at this point, unless there's an extreme workover or something, we don't anticipate capital calls, if that's what you're asking. Most of the capital has been allocated to equipping these wells with this data. The first initial couple workovers that we knew coming out of the gates that we would have downtime on some of these wells, we wanted to restore production, and
we redesigned the rod string on the SAM. We got a whole new rod string for the Fred, plus additional pipe to take it down deeper. There was some costs associated with the due diligence that a portion of that went towards, but I mean, as far as how much capital has been expended, we're still sitting in a pretty good position as far as, because we put in the same amount of capital on that side of it too, and so we're in a good cash position to continue operating effectively and efficiently, which is what that was built for, was to say, okay, because all of this lags, half of June was actually operated by Continental, and they don't give you checks. They send you bills very well. They don't send checks very well. And so to float during that period, as far as what we spent, it's been pretty marginal. I think that we have about $30,000 into the Fred. That's just for the equipment. Then the price of the rigs, probably $50,000 there, and probably $20,000 on the SAM. Other than that, there was a $3,000 pump that was installed. Those are the big things. Everything else has been very, very marginal.
routine daily stuff.
Who handles the accounting for all of that internally for essentially our partnership?
Yeah.
Sure. So myself, not as an accountant, but we have an accountant on staff, Kyle, and then we also have a consultant that's worked for Chesapeake and Tapstone in the past that's helping us with setting all of this up, taking all of Continental's data in, reworking it and fitting it into our system. So we have two CPAs, one that's full-time with us, one that is consultant-based.
So they'll build the books to say we just spent $50,000 on the Fred. That's
Yeah.
Yeah.
So all the joint interest billing and everything like that will be handled internally through myself, Kyle, and then our consultant.
Cap, it's a little bit difficult too to answer your question super direct, just because everything in the oil field lags, including the bills. So you get something done, and then you may not get a bill for a couple weeks, and then it's due in 30 days. And so there's a little bit of ambiguity. We know in large terms where we stand, but as far as like nailing down to a specific number, we'll have that in the coming weeks, and you guys will get your reports as we get them too.
We're also looking for a closing statement on the initial transaction.
Yeah, I think you talked to Jed yet.
Have not, but Clayton, we probably need to do that. You have some time tomorrow. Do a conference call. Okay.
He's a sharp guy. Don't steal him.
Yeah.
What other questions? Did that answer your question, Cap? Do you have anything else?
pretty well.
Okay.
I was interested to see that he's got all the amplified equipment there in your truck, and you were out there making adjustments, hooking up valves and whatnot while we were out there on the field trip. That was impressive. Here's some other pictures, and I found it was interesting too. I think I put that in the report that Harold wants his signs.
Yeah, specific wells. He's requested specific well signs to come back.
Have we got our signs made yet, or are
Everything's-
signs going on the property?
Yeah, everything's been ordered, and for the most part, we'll replace a few of the signs that need to be replaced, and then the other ones we'll be able to just put stickers and cover up Continental and replace numbers and save some dollars.
Okay.
Every sign's $50, and
A sticker's a lot cheaper.
Sticker's a lot cheaper.
Okay. Okay, here we go. That's the one that we were looking at. I think you have, I'm trying to remember.
That's the Sam right there. That's the one.
That's the one that we made a great turnaround on.
Correct.
Okay. There's our disposal well.
Yep.
Pumping unit with the equipment, with the amplified equipment on it. Okay. I believe that is a disposal well.
What's a typical total fluid volume that you guys are producing?
We dispose about 2,400 barrels a day of water, and then on average, well, that's just within the disposal system. Is that what you're referring to, or everything?
Yeah, didn't know like our total wells is about 200 barrels a day total fluid.
There's two subs. They make about 1,000 between the two of them, and then the rest of the assets that are online, which is
About 200 barrels.
Yeah, they'll all do, and some of them are less. Like the Sam traditionally has been on timer, so it doesn't make as much. The Fred used to be on timer before we deepened it. It used to not make as much. The Pacific, which is not lined in anymore, it's actually a Woodford well, so it makes about 10 barrels of water a day. But so it depends on the well, but most of them are 200 barrels or so whenever they're coming out of the Arbuckle.
It's about a 5% cut on those.
This is a culinary experience here in Ringwood.
It's the only place to eat.
It's the best place in town.
Ringwood's got a population of 340, and this place was packed.
Yeah,
Yeah, it was. We had to wait forever to get our food.
Yes, we did.
Yeah. But there's our whole crew. I meant to ask you guys, how are the production guys working?
They're great.
How, I mean, give
Yes.
us a little fill in on that.
They were really excited to not be working for Continental anymore. That was the initial meeting we had with them. We weren't really even sure if they were going to accept our offer. We sat down. The Continental people left the room, and they were like, "We can't wait to get started." So they've kind of been in a field that has gotten a lot of neglect, and they were excited to see these things come back to life. Bill Jenkins has worked for Continental for 46 years. He's been there. He said we have more wells in this field than when he started with Continental, and so he's really been around for a long time. He knows these things well, and he's very, very invigorated to get them back going because he knows what they can do.
Tell them about what this piece of equipment is.
There used to be a Arbuckle disposal on this site, called the Dorothy. They plugged in, I think, 21 or 22. And so this actually comes from or to the Chet disposal. This comes in from 2 producers that are nearby. Same thing with that one. And then that actually goes to the commercial disposal. So
the advantage here is if your disposal well goes down, you can switch this, send it to the commercial well.
yeah.
And I remember being out there's an impressive looking piece of equipment. Those valves are extremely expensive.
Yeah, I would say that's $75,000 worth of equipment on this location that we didn't pay anything for. So, yeah, maybe more. That's pretty conservative, but that's how I usually live my life, is trying to be more conservative than not.
But anyway, I thought that was impressive, and the fact that it gives us redundancy,
Yeah.
backup,
No doubt.
if we have a problem with our well.
Yeah, and I think that's why also as we bring more on, it gives us the flexibility to send it to the disposal. But like Caleb said, if there's an opportunity to gain an additional disposal in the area, then it's even more redundancy, more flexibility.
Or if we decide to put another one on sub and move more water.
Are there any other larger companies currently drilling or proposing that are active in this play?
So Continental just sold basically all around us the other assets they had to Validus Energy, and I think Validus has some plans to drill, and we may have some offsets that they're doing. There's some other stuff under some of the overrides and things like that.
There's a well going in 3 miles north of the Wood, which is right.
If you go back,
Can I go back to the
Sure, yeah.
map?
Oh, wait, is it the map here?
It's in PowerPoint.
Yeah, it's in
Oh, the PowerPoint, okay.
yeah.
Okay, there you go. Get you on the slideshow. Yeah, there you go.
So
Go back. Go to the next one. Go to the gathering system map. That's the Wood.
the Wood's here.
So this is the Chet, section 19. The Wood is in section 24.
Each of these squares is one section, which is a square mile. So 3 miles north of here, so it'd be about there. There's Citizen is drilling a 2-well pad there right now. That's the closest for right now.
Is that vertical?
No, horizontal.
Horizontal.
Mississippi wells.
Mississippi?
Yep.
Okay.
So there is some activity. If they're obviously do well there, then that's what it spurs more activity. But in the Ames hole, not a whole lot right now, and most of that is because 2 operators own the Ames hole, and we're one of them. So the others, D&J, and a lot of that non-op interest is actually in a number of those wells as well.
That reminds me, we're getting close to 1 o'clock, so we're going to shut it down here in a moment. But we have another venture, if you look on back, refer to our schedule here. Total Stockton Partners, I don't think I mentioned that. We've talked about it in previous meetings when I confirmed with David Robertson. This is on a pad of a well that we participated in, actually a 3-well package with Truvine Energy. This is about 10 or 11 years ago. It's in Payne County, just about 5 miles north of our agri-resource area, and we drilled 3 Woodford wells there. They have a good-looking Mississippi sitting on top of them. They also, through well control, they've developed a vertical prospect there with some attractive vertical targets, and we're going to probably do a prepayment on that this year. This will be a deal with a big write-off up front, so you can shelter ordinary income, and then we'll drill first quarter of next year initially a vertical well targeting the Red Fork, Skinner, and Simpson Dolomite. And what we'll do is if we make a good well there, we'll complete the vertical. Economics on that would be very strong. But if not, we will shoe out and do a Mississippi horizontal, which is the one that we've had really good luck with in the agri-resource area. This is on a structure like the Esther Cree, the Bradley, some of the better wells that we've had in that area. And Greg Ripple, our geologist, believes that there's very strong potential there. So that could end up being a 2-for-1, a vertical and a horizontal, we're horizontal if the vertical doesn't work out. But that way we save money and we get a look at two decent plays, and that will be available at year end for a prepayment. So we're on the money here at 1 o'clock. Any questions on anything we've covered today?
Would you like me to show the system as well?
Sure.
Okay.
You bet. Oh yeah, that's what I want to say. Absolutely.
So, this is an example of looking at the software that we've now installed the hardware on location. This is the software end of it. So this is what we can see on our phones. This is the dashboard on the computer. So it tells you how much runtime you've ordered the pumping unit to go. This represents 24 hours. So, and then uptime means has it actually run that time. So if those mirror each other, you can have 100% uptime and 50% runtime, and that just means it's running. You're told it's run 50% of the time, and it's done that. That's how fast the pumping unit is going as strokes per minute. Tells you your stroke length. Tells you if you have any problems. That's what the tickets are for. And then if you go to technical, so this shows you in 2-hour spans, 1-hour spans, all the way down to 5 minutes. And the dynamometer, which
So this is real-time data that we're getting on each and every well that's equipped with a system. And you have this where you can look at it on your phone?
Correct. So from 11:40, 2 hours later, this is what we're seeing right now. And that shows every stroke that is made in that 2 hours. So that dynamometer that we had the picture of that was small was giving you a similar card as this. This tells you a lot of data.
Explain to them, if you can, how to read that.
I'm not an expert. Shane's probably better at it than me. But if you go from this corner to here, that's the upstroke. And then the bottom half of this rhombus is the downstroke. You want to have space in between those that shows that you have good pump fillage, meaning you're not pounding fluid. So if you are pumping off, those strokes will get tighter and tighter and tighter. I could show you an example of one that does that. But this means that you're having really good pump fillage. Everything's kind of working correctly.
And that shows every stroke over, you said you
2 hours.
do it over different increments.
Yeah, so this is 2 hours. Yep. If we go down, you can see the pump fillage here as well. So very, very healthy. We have not pumped it off yet. This is the Fred. This is the one we deepened. Now, we had several days of just water, which means that, and we got the fluid level shot twice. We have reduced it down quite a bit now to where we're getting closer to the pump. So eventually we will gain on this, I think, enough where we'll go on timer again. We'll shut it down, but until then, we need to keep running it until we get there. So,
and you can adjust the timer from the software.
Correct. I'll show you that too. This is the load on the rod string.
Yeah. You used to have to send somebody out there and wrench on it.
Yeah.
You know?
There's the pressures on the tubing. So, and this takes it every 5 minutes and then averages it. So,
Shane, what do you think of this system?
It's really impressive. Yeah, very impressive asset.
This shows you over a week. So if you do have a failure, it will show you. I could actually show you exactly when the SAM went down, what time, because the load on the rods ended up collapsing. So that shows you. This is what it looks like. We just turned the pumping unit off here, but and then it came back on. The load was there. So it shows you all different kinds of stuff of pressure over time. There's your pump fillage over time. You can see that we're still working our way down right now. And hopefully, I mean, it'd be great if we never pumped it off, but I would imagine this one is going to end up getting there. Here's the controls feature that you were just talking about. So right now we have it on smart mode, which all that means is that right now I have it running an hour every hour, so it's running 24 hours a day. But if the pump fillage in the middle of the night happened to go lower than 70%, it would kill the unit and wait a time period and then kick it back on and see if it...
And in smart mode.
Correct.
So you don't even have to go in and change it. It does it automatically.
Right, yeah.
Wow.
So to save the rod string and so you don't pound fluid, it'll adjust that. And the more data it has, the better it gets at that. But for right now, I'd rather not have to worry about it in the middle of the night and let us do its thing. So, but you can go down to timer down to the second of how long you want it to run, where traditionally the timer is adjustable by 15-minute increments.
And have to be on location to do it.
Correct. And then I'll give you one more example. So that's the Fred, which has been a great success. Here. So this is the Sam. And the Sam, 2 days ago, had the water transfer pump failed, and we had not had it fully implemented, so it actually created a ticket because we had a high level alarm on the water tank. We've resolved it since then, so I need to do all. There we go. So this was at 2:30. 2:30. Parted a rod right here. So this one right here on June 18th says it parted a rod at 9:18. Sent us an alert that it parted a rod. We were able to shut down the pumping unit remotely. It shut down automatically, but shut it down to where you don't burn your belts up, because there's a number of reasons why you don't want to run a pumping unit with a parted rod. Told us the problem so that we knew with the rig, hey, we have a parted rod. We sent out the rods with the rig. They had the right tools. They knew exactly what they were doing. Pulled it, replaced it. Saves you time and money in that way. And then this was from the other day. So an emergency shutdown at 3:38 a.m. right here. So at 3:38 a.m., the SAM emergency shut down because the water tank got to a level that we've set parameters that if it gets to this level, then you shut everything down. So it shut itself down at 3:38 a.m. because the pump, the water transfer pump failed. What that prevents is any kind of spill, which then is very costly, or if you get the OCC involved, then you don't want the magnifying glass on you. So there's just a lot of protections that are in here. This is also tied in with the disposal. So if the disposal has a problem, it goes back into every one that's connected to that and says, hey, shut down, shut down, shut down. They all go down at the same time.
Fascinating. That is a great demonstration. Any other questions? I hope everybody understands the significance of this automation and this software. It's just incredible. We haven't got any cows stuck in the pump.
No cows in the pump. No.
That's one of the examples we gave previously. Okay, any other questions on anything we covered today? I want to thank everybody for being here today, and a great presentation, guys, on your part. Matt, thank you for the update on Adams Creek. And we've got a lot of great things to look forward to this year, the balance of this year. So, okay, thank you. Nice to meet you.